sharing your perspective with us on NewsX World. Viewers, shifting focus to more updates coming in. US President Donald Trump has stated that he will impose a 100% tariffs on imports from China starting next month. This has further escalated tensions between Washington and Beijing. Now, in a lengthy social media post on his platform Truth Social, Trump has also announced new export controls on critical software, accusing China of being very hostile after it tightened export rules on rare earth minerals. He even threatened to cancel a planned meeting with Chinese President Xi Jinping before later saying that he was not sure that they were going to conduct it. Listen to what he has to say.
So, but I don't know that we're going to have it, but I'm going to be there regardless, so I would assume we might have it. But, you know, they hit the world with something that really is not anything that people are going to do. And it was shocking. I can tell you, Howard and I and Todd, we all, Scott, we were all speaking about it before. And we said, where did that come from? It was just, that was out of the blue, right? Out of the blue, they came up with this whole import-export concept, and nobody knew anything about it.
With us on the broadcast is Professor Arvind Mahajan. He is the Lamar Savings Professor of Finance at Texas A&M University. Thank you so much, sir, for taking our time and speaking to us on NewsX World. At the outset, the world's largest economy is once again in an all-out trade war with the world's second largest economy. In your assessment, how will this now impact global markets if it continues?
Yeah, that's a great question. Well, we really don't know how far this will go. Clearly, trade wars are bad for everyone as a generality. In this particular one, this really comes as a surprise, especially in light of the fact that President Trump and President Xi were scheduled to meet each other at the end of this month at the Asia-Pacific Economic Forum in Seoul, Korea. So this really was very much unexpected. And I think the market is trying to digest this information and what exactly it means. It can have multiple implications. We just need more information. It could be at one level a part of a negotiating ramping up of pressure by China on the US. I mean, it's possible. Before the APEC meeting to gain some leverage. It is really unclear where this came from, but suddenly we are observing a more aggressive behavior from China, especially when we see that it is starting antitrust proceedings against Qualcomm. It's imposing some port fees. Which were not expected. So it really is unclear at this juncture what the motivation of the Chinese is behind this, because nobody really expected this. So we just have to wait for a few days for more information to come to see what the underlying reasons for this were. Now, the US response is not surprising because one, I think it's simply a retaliation of what China is attempting to do with the critical mineral exports and the rare earth exports. Again, these are not new things. They have been in conversation for a while, except suddenly this came out of the blue when things seemed to be calming down, and people were optimistic that if President Trump and President Xi meet at the end of this month, that might alleviate some of the tensions. And this has just recreated those tensions. We just know very little at this juncture to be able to tell how it's going to get played out. But usually tariff wars don't have a history of happy endings.
Absolutely. And speaking of unhappy endings, who is this move likely to hurt more, the US or China, and in what ways?
Well, I mean, again, this is very unclear. From the US perspective, I think as a generality, from a US perspective, US thinks that it has more of what China needs than what China has of what US needs as a general principle. And therefore, if there is an outright war, at least from the US perspective, the Chinese will be the net losers, which is not to say in a trading war, everyone loses. I mean, for example, the farmers in the US, the soybean farmers, they've been dramatically affected by these tariffs. China is importing very little of soybeans from the US. They're importing virtually everything from Brazil. So you're going to have individual segments of the industries which are going to be impacted in different ways. It's hard to tell in aggregation how this is going to get played out. At least from the US perspective, it seems that US has the upper hand. And therefore, China, and that is why it's unclear what triggered China to suddenly come up with these curbing of exports of critical minerals and rare earths.
Indeed, sir.
But everyone get hurt.
So requesting you to stay on with us. We're tracking some further updates in this development. China has hit back at the United States, announcing new port fees on US-owned, operated, built or flagged vessels. This is a direct countermeasure to Washington's new levies on China-linked ships taking effect the same day. Now, Beijing's Transport Ministry has stated that the move will come into force on Tuesday, expanding the charges to firms with US investment stakes of 25% or more, potentially affecting hundreds of vessels. Still with us on the broadcast is Professor Arvind Mahajan. That's not all. We've also seen that the Wall Street has crashed after Trump's announcement. $1.5 trillion in valuation has been wiped out. Dow Jones has fallen by 1.9%. S&P 500 is down 2.7%, and Nasdaq has tumbled 3.5%. Should this then be an indication to the Trump administration perhaps to not adopt such hardline protectionist stance?
Well, frankly, not really. The US stock market's been very resilient. If you will recall in March, when first time President Trump announced tariffs, the stock market reacted very badly. The S&P was down dramatically. But then as the stories unfolded, the market kept coming back. As a matter of fact, last week, it hit all-time high. So the S&P, the PE ratios have been the highest in a very, very long period of time. And so this one short, one day decline of 2%, while yes, it is very significant, but given the nature of the US market and how resilient it has been, and especially with the investments which are taking place in high-tech companies, especially in artificial intelligence, I, as an investor, really am not very worried because I've seen the market go down, I've seen the market recover, and I'm fairly optimistic that the economic indicators, by and large, in the US market are fairly healthy. There's an anticipation of the Fed reducing another round of reduction in federal funds rate. So I don't think the stock market can be taken, a one-day move in the stock market can be taken as a meaningful barometer of what the long-term consequences of these tariffs are going to be.
All right, sir. With that, I would like to thank you for taking our time, sharing your analysis with us on NewsX World. Viewers, with that, we're shifting our focus to more developments coming in from the United